Hello friends, welcome back to the channel. Let's start quickly with the analysis of Nifty today. As you can see, during the last discussion, we had already discussed that if we are breaking below this low and we are giving something like this, a break of a structure just below this low, which was made previously, then we will be good to go short in this case. But as you can see, it was again a trap used by the bulls. So still, I'll give you the logic as well. The first candle, 15-minute candle, opened and significantly it was reversed by the next candle. The very next candle, it was just reversed. So in case any of the people who got and entry short here, they might have got butchered or they might have got stop loss triggered somewhere around here. So that was not a good trade going short just below this, only for the sake of breakout. As I have already mentioned multiple times in previous videos, that if there is a direct breakout, it is good to wait for a pullback. And once price action does something like this, you will be having a good position to hide your stop loss as well. But in fact, if you are just going short or long for that matter by watching the single breakout or simple breakout, then I think that would be a more disastrous position to go into, because you won't be getting a good position to stop hide your stop losses, but there are high chances of getting a fake breakout just like this and just reversing like that. So the big players or the position makers or the market drivers generally do something like this. They will be just catching all the stop losses lying over here, and once they are filled, they will be just pushing the market in the opposite direction. So this is what I was meaning, that we just have to wait for couple of candles to confirm that we are good to go in that direction. All right. So now let's pick up the Fibonacci tool and try to draw some retracement levels. As you will see, this was the last swing Nifty had made, and it was a good swing. The momentum was good, and in fact, after this strong move, there has been a 61.8 retracement till now. It completed that today, and if you see, it has bounced very nicely from this particular level. I'm not saying that this is the reversal of this particular correction, but this might be something to look for a uptrend. Why? Because if you see, 61-point retracement has been made here. Another thing, if you see, today's move was able to break above this. If you see, this was the move something like this. So these are two consecutive lower highs which have been broken to the upside by the price action today. So in case price is able to move above this decisively, then I think you should be waiting for something like this and get long above this. All right. Now there can be two possibilities. What if we are just going, you know, gap down below this? Then the logic will be simply same. If you are getting a consolidation here or a pullback, something like this, then go short in the same way. But if you are getting something like this, you get a break above this particular swing high, then just wait for a smaller time frame or some consolidation here. And sorry for forgive my drawing, some consolidation here, and once it breaks like this decisively, play the stop loss here and go long. So that will be our two possible trades. Either it will be going, you know, the market will be opening gap down, breaking some lows, then our logic will be something like this: wait for a pullback and just go long below that swing low. In fact, if it is going up, then our long position will be just opposite of that. So this is it for Nifty index, and the premise for supporting this is that we have already retraced below 50%. Around 61.8 retracement has already been made by this particular retracement, and in fact it has been going on since 2nd of December. So possibly there is a pullback which might be going somewhere around at least 61.8 retracement of at least the correction level. So it will be somewhere around 18800 on futures chart. So this will be our analysis for Nifty. Quickly, let's look on the stocks, particular stocks. All right, this was the HDFC Bank, which we already discussed to enter somewhere around 1635. If somebody has already entered 1635, then I think he must have booked some profit or might be trailing it. So if you have already entered the position, I think it will be good to place the stop loss somewhere around 1632 or 33. And for tomorrow's position, if you are able to get a break above this, which is 1647, then I think it will be good to go long above here. You break this one, you should go long over here and just keep on trailing the stop losses like that. So if you want me to keep the exact levels, then this will be it. 1640 will be your stop loss, and the mechanism to exit will be trailing behind every window. All right, and the other one is Indigo. Indigo has a benefit when the oil market is going down, so crude was somewhat down from few weeks, so this has been getting a benefit. In fact, we will be opening a long position around 2059 and our stop loss will be coming around 2037. Mechanism of exit is exactly the same as we discussed earlier, trail behind every swing low. Next one is Granules. Granules has been picking some momentum to the upside, breaking this particular swing high in that swing low, this lower high in that mechanism, and now it is consolidating. You see, here it is consolidating. In case it is gathering momentum to go and break 339.75 on the upside, a buy position should be initiated, keeping the SL around 336 and just keep on trailing whenever a new swing low is formed. Another one is Nauker Cap. This is a small cap, and I saw that it was making some good consolidation here. And after the good move, it is still consolidating. It has a good move here. Then it broke this falling channel kind of thing. If you draw like this, falling wedge kind of thing, whatever the chartists have known to call it. And here the boundaries are almost horizontal. So any break above 68.75 should be your buy position. SL will be 65.75 and you should keep on trailing until you get out on something like this. You get a break below this, you'll be out. So this will be your position for Nagarkov. This is a small cap. In fact, if you are going to open a long position, you should be putting less capital in this one. If you are putting 100 rupees in these, you know, big stocks or multi cap stock, then Nagarkov should be getting somewhat a reduced position sizing. All right, because if it moves with a good momentum, it will easily give 4-5% move. All right. So this is all for today's video, guys. If you like the video, please hit the notification icon and subscribe to the channel if you have not done so. If you have any comments, please do post in the comment section. Till then, thank you very much.